And we are live. All right, hey guys, welcome guys. Been a while since I last saw you guys. And today, right, I'm very honored to have a special guest, Master Implementer Marc. Hi, Marc. All right,
Hello, hi.
yeah, thank you for taking the time out to be here on this session. So Marc, right, is someone that some of you might know him already. But for those of you who don't, right, I think he is someone who is very good at, I mean, this is just my observation. He's very good at, taking action and implementing stuff that he learned. And it's across like different disciplines, not just in like investing, but also in life, health, relationships, so on and so forth. Right. So I thought today, right, I want to get him on, right, to just have an informal discussion and just to perhaps share some of his tips and strategies, right? How can he do like his implementation and taking actions specifically for investing context? Because I've been observing some beginners out there, they've been trying to learn, but perhaps they are not taking the right steps or not optimizing the action steps that they could be doing. Right. So these are some of the things that we'll be covering later on. But before that, right, Marc, welcome on board and
No,
perhaps
thanks.
just give a short introduction about yourself so our audience will know you better.
Definitely, right? Thanks for me for coming, letting me come on this interview, right? So, my name is Mark. I'm creator of this thing called the Master Implementers Movement, right? And very quickly, right, what is it about is it's really an observation, right? I think over the past maybe 8 years, right, I've been attending programs, workshops, seminars, and I realized that a lot of people, right, they can attend the same workshop, the same program, right, or even read the same book, right, but
Right.
achieve drastically different results, right? And I realized that this was an issue that I saw over and over again, whether it was in an investing program, options, forex, right, e-com, business, affiliate marketing, whatever it is, right, that there's always a group of people that can achieve crazy results, right, way faster than anybody else would think of, right, and at the same time, there are people who are still stuck, right, or not at the area they will of life where they want, right, even after like 5 years of attending a program. So I started this about 2 years ago just for the fun of it, just to share a little bit more about like what I did personally to accelerate my progress, to learn faster, to learn better, to take more action, right, and it grew, right. A lot of people started coming onto the space, and I think a lot of people benefited from it, right? So, which is why over a couple of things right now is my full-time role to help people to lead more productive, profitable, and purposeful lives, right? So even when I talk about implementation, right, it's not about just doing and hustling, right, and getting burnt out, right? It's about doing the things that actually move you forward, right, but also not sacrificing any other important areas of their lives, right? So it kind of evolved over there, right? But this is really what I do. I coach, I mentor a bunch of people, right, who also help to focus on this at the same time, but also create a lot of value through my community and sharings as well.
Awesome. So just curious, like just for me, like does this
Yeah.
implementation, right, like this massive action steps that you're taking, does it come naturally to you? As in, like since young, you're always like, like as
Yeah.
a kid, you're always like,
Yeah.
so optimized, or did a lot something else happen along the way? Like if you don't mind sharing.
Yeah. No, it did not. It really did not. So, I was what you call, right. So, as much as I said that I observed people were like the seminar junkies. Right? I was it, right. So, I'm somebody who loved to hoard information. I love to read books, right. I have this application called Pocket. I would save every article I felt was useful for me, right. So, I was somebody who wasn't so focused on implementation. I was someone who focused on like just absorbing as much information as I can, right. And typically, right, especially as an investor, right, I was just usually looking for the stock tips lah, right, or the stock strategies, like just to copy and not really focus on being convicted of what I do, right? And even if I knew the stock, right, it doesn't necessarily mean I'll take action because all I'm trying to do is just to hoard all this information, right? I think it was only about 2 years ago, right? I attended one huge event, right? I think you were there, right? I think it was this thing called the Financial Life event. That was more for business, right? But I think that event, right, made me realize that after so many years of attending programs and reading information, right, I'm still nowhere near the level of life I would like, even though I kind of knew the theory, the principles, the concepts, right? And I think that was a big wake up call for me that I needed to start taking way more action for myself, right? So the whole master method movement started of trying to solve my own problem first, right? So after that, what happened is I started changing my environment. I started hanging out with people, different people who were taking action, right? I started putting a wallpaper on my phone, my desktop, right, on a big quote to say ideas are like shit, but execution is everything. So what happened is over this period of time, right, next few months, right, I was just constantly reminding myself that take action, execute, implement, right, over and over again. I started sharing with other people my journey, right, and that's how it became natural for me. So right now it's like I'm always focused on how can I implement this, but it didn't start that way, right? I was just an information hoarder guy,
So,
man.
so spark you, and then like that event, and then you do when you did a reassessment, and then you realize, wow, actually a bit of wake up call lah, right?
Yes,
Awesome.
yes.
All right, so maybe let's talk a bit about and how do you like translate that into investing? So how is your investing approach like right now? Like how is
Yeah.
it I mean, your investing style?
Yeah, so in the past, right? So I was in university and stuff, right? I realized that one of my biggest regrets, right? But of course, some people say there's no such thing as regrets. You get to learn, right? But one of the things I would have done differently, right? If I had a chance right now, is in university, right, to actually start spending more time on building my conviction of companies, right? So what I did in the past, right, is I was just trying to read like what were the latest stock tips. I trying to read Motley Fool on the latest recommendation, right? But I wasn't really trying to build my foundation of the company, right? That's number one. Number two, right, I wasn't really focused on putting my what I say tracking stock prices instead of putting alerts that okay, if the stock drops 10-20%, right, I will start purchasing it. That's a huge thing that I didn't do, and I missed out so many opportunities during my university days, right? That 3 years, right? Because why I was hanging out more just to have fun, just to study for my grades and stuff. I
Right.
can gain a lot more grades during that period. All right. So my investment approach right now, right, and I think we I have slightly different states of like preference, right? Because right now I'm a bit more passive, right? So I would say, right, my investment approach right now is to be pretty heavily focused on stocks, right? They have a very high conviction in, right? So I'm mostly into stocks, about 80%, about 20% is options, right? But for my stocks, right, a few key things that I'm looking at, right?
Right.
I think number one is it in a growing sector, right? That means even if the company wasn't the best in the space, right, I can still rest assured that, hey, probably in the next 5 to 10 years time, because of the entire sector growing, right, I can still grow, right? One of my other big investment approach on my thesis, right, is that I want to invest in companies that I'm very aware of the biggest risk, right? So what happened is I feel that a lot of people, right, they might make good money in the stock market and options trading, right? But one of my biggest investment criteria, right, is that I want to sleep extremely soundly at night, no matter what's happening in the market,
Mm.
right? So one thing is I just have to be aware what's the biggest risk. I just have to be aware of what's happening in business and to see, okay, right, if even if it drops for other reasons than that, right, I'm still pretty fine because that's the biggest risk of the company, right? And I'm pretty good with it. So, and I think number three, right, and it's something that I learned a little bit just a couple of months ago, I think about 6 to 9 months ago, which is that, right, I only want to invest in companies. Okay, conviction is one thing, right? For sure, that's like a given, right? I think you also know, right? But one thing I realized is I want to invest in companies, they're actually industries and spaces that I'm excited about, right? So companies that they are trying to build a future that I'm like, oh shit, man, that's the kind of future that I want to see for myself, or that's future I'm excited in, right? And I realized that that builds up a lot of your holding power, right? Which is something that I really love for myself. So that's just a very quick some of my key criteria when it comes to investing in stocks, my approach, right? For options, right, 20% of my options is just for my slightly more, I would say, speculative plays, right? But ultimately, I don't look at it so much for myself.
Right. Also, man, thanks
Yeah.
for sharing. So I
Yeah.
agree with strongly on last point. So like investing in how you see the world evolving and
Yes.
changing, right, like to be a better place and all that. And then
Yeah.
on your first 2 points is first one you mentioned is investing on companies that like going heavy on companies that you have the highest conviction.
Yeah.
And also number two, right, be aware of the what's the biggest risk of these kind of companies,
Mm.
right? So that and this understanding the risk helps you to sleep better at night, right?
Yeah, so I'll add on a little bit, right? As something I might rumble on a bit. So, but you see, like companies like Nokia, right, or even recently GameStop and stuff, right? I mean, so one thing I realized, last time, like way back, I used to be very FOMO about all these stocks. Right? Oh, it's going 500%, going 1,000%. Oh shit, what should I do, right? But I think, I think after a while, I realized that I focus on what I really believe in, right? And I feel so much more stable, more chill, right? I see a lot of people in different Telegram groups or Facebook groups that they're just being FOMO about the next hot stock. But I realize that it's as long as I'm patient, as long as I'm stable enough, right, with this big investment criteria in place, right, I'm very confident that my income will grow in the next 5 to 10 years. I can do it while sleeping soundly at night. So that's something I also got to realize for myself over the past few years as well. I
Great,
think that's a very big thing that I also learned over time. Yeah.
cool. All right. So I think like over the years, because I also know you do a bit of coaching, like
Yeah.
on your own in your movement, and also you have been helping investors also, right? Like especially beginners, to help them kickstart and all that, right? So perhaps you can share any issues, any like commonalities or observations that you observe among the beginners, like especially those who done well, like
Mm.
what actually is that thing that separate them for people who are struggling, perhaps you can share a bit on this.
Yeah, definitely, man. So, for some of those who might not know, I think I've been investing for about 8 to 9 years already. I've been teaching people just for the fun of it, right? I've been done it for fun. I've done it for free. Done it for professional in my career as well. So I've met a whole bunch of investment students from different walks of life and countries, right? So I think number one, right? I just want to put it out there. I think it's a bit cliche, right, is that but I think your audience are people who are actually pretty take action. But I think this one thing is that, right, you got to even start opening a investment account, right? So I don't know if you have found this familiar. Like I've been teaching investing to people for like maybe like some of my friends like 5-6 years ago, right? And they only started opening their accounts like last year, right? Only when there's a huge opportunity, right? But because of the fact that they didn't really get any like real life experience, right? When they first started, right? Even yes, they could take advantage of the opportunity and stuff, right? But they were still unsure. They didn't know what was this, right? They were trying to take out the technical issues. And because of that, a lot of them were late to the party, right? Not saying that they weren't earning, right? But I think there's one thing is that you do not wait for the opportunity and then to open your account, right? You actually start even right now, think maybe even times are pretty okay, right? Hey, right, take action so you actually have a much better sense of what's happening. So when opportunity comes, right, then you can actually start taking advantage of it. I think for your community, a lot of them actually have already started, so I think that's fine, right? But I think a few key traits, right? So I'll just go a bit deeper into that. I think number one is that a lot of beginner investors, right? I think I've shared a bit earlier, right? Is that they're always looking for the next hot stock, right? They're always looking for next hot stock, right? And because of that, right? So I go a little bit deeper, right? But I think a lot of people know about mindset. Okay, you look for the next hot stock, you get FOMO, right? You lose, you have no conviction. I think a lot of people talk about it, right? But one thing I realized is that, like, let's say if I have a $5,000 portfolio, right? I remember one about 2-3 years ago, right? I was giving like 10, 15 investment coaching sessions all in one day, right? And more than half of them, right, have this issue of I have like less than $5,000 in my portfolio. I have less than $10,000, but I have like 20 different companies in my portfolio. I was like, shit, like yes, you are diversified, right? But it's so small that even if one of or two of your stocks gain like 100, 200, 500%, right, your life doesn't significantly change,
Doesn't move the
right?
needle now. Yeah.
It doesn't move the needle. So I always feel, right, like at the start, right, yes, your portfolio, you want to invest, right? But my take is at least, right, your first position, right? My rule of thumb is at least $1,000 into one trade, right? If you want a bit less, like 800, that's pretty fine. But at least about $1,000. Don't put like $100 into one stock, right? Yes, you can get started with $100. That is true, right? But if you really want to move the needle, right, and really build that conviction, right, I think you need to put at least about $1,000, right? But these people are like having $5,000, 20 different stocks, 25 different stocks, right? And that just that wouldn't really move the needle for a lot of things, right? I think number two, right? I think a lot of people, right, in my opinion, they might be reading the news a bit too much. That means they're trying to get their sources from a whole bunch of places and not just news, right? I'm talking about communities, groups, and stuff, right? What I recently learned, right, is that the people, right, a lot of people who are knowledgeable, who knows all the theories, concepts of investing, right, a lot of them do badly because they read like 20 different news, 20 different groups, right? And because of that, they're constantly confused and they don't take the most rational decision or the most optimal decision for their life, right? So my take is, if you're starting out, feel free to go explore different communities, groups, right, email newsletters, right? But my take is after maybe 6 months or so, right, or even 3 to 6 months, right, start focusing. Okay, who are the ones that I resonate with most with? Who are the ones that I like the most? Who are the ones based on my friends, the people I talk to, right? They know that these people are legit, right? And then from there, right, to follow a smaller group of this people say gurus or the speakers, right, or whatever you call it, right, and there's some of the news that you like, right, and then to focus on learning from them. Because if not, right, it brings to one huge problem that I'm trying to overcome, right, in the world, which is a massive information overload and overwhelm, right? I think you know that a lot of people are just overloaded with so much stuff, right? And one thing is because it's not because that they are just checking social media. Some of them they do, but even for investors, traders who are serious, right, sometimes they are sucking in too much information from too many sources, right? They just get super confused, right? Some say GameStop is great, some say not as good, some say Tesla is overvalued, some say Tesla sucks. Like there's a lot of things that's going on, and I think these are the, if I say the top two biggest issues that I see among investors, traders, right, today, right? I think these are the things that will actually help. I would really want investors to take note of as they're starting out their journey. Even if you know that you're kind of past that stage, please, like, if you could share with people who are starting out, I think that'd be really powerful for people, man.
One thing, you don't mind, I just add on to
Yeah,
what
yeah.
is, like there's so many news, right? Different gurus saying different things. One way you can assess like who to listen to, right, will be to give what would like ask yourself like, if this guru, what's his credentials? Like you say, for example, if someone said Tesla is overvalued, right? Then what's his credentials of saying that? How has
Yeah.
he been doing over the last few years and all that.
Mm.
So I think that's where you can allocate like weightage to someone's could be stock tip or his assessment of a certain company, for example, right? So this,
Definitely.
I mean, if some Wall Street analyst say something, like what's your past record, right? Yeah.
Yeah. Yeah. A lot of analysts and stuff out there.
Yeah. Okay, back to you. Right.
Yeah. So as I think those are the two biggest challenges. Like so for example, I think over time, right, I've started to be a bit more focused on who I follow in. I think Ray Ming is definitely one of the persons I would do a quick shout out. Right, because I feel that not only are you like, as you know your stuff, right, I think for sure, and you're someone who absorbs from different information, different sources, and you simplify it for people, right, which is something I love. I think right now, and this is not just for investing, man, like business, career, productivity, life, whatever, right? I think there's going to be an age of this new group of people where our jobs, right, is not to like build new information, is to actually, right, to absorb this pieces of information from some of the top people out there, to simplify for people, to summarize or make it more concise, right, and then to share it with more of the people or the masses. I think that's a huge thing that people should start taking focus a lot more on, right? And so where was I? Yeah, so I think for I think what I love about you is that you also very open in your sharing your portfolios and what you do exactly. I think it's really step by step instead of a lot of theories, concepts, right? And people who don't really review what they really do. I think that's the age. It used to work in the past, maybe, right? Because you're trying to create some secrecy. I think right now people value openness, honesty, authenticity so much more in today's world, man.
Yeah, keep things simple, lah, right? Definitely. So, like beginners, like some investors, those that done well, that have certain commonalities. Those that struggles also, right? Perhaps, any tips that what do you think are the top one or two struggles that they have outside of this your previous point, what you have already shared, and also how could they overcome it? And really big through to like. So just thinking if there's some beginners who didn't have the best start and then his portfolio like they are like, for example, right, last year or the last few months was pretty good. Everyone make 100, 200, 200% triple our portfolio, and then someone could be only having like 20, 30%, or even like break even, or you're having some losses, and then they might feel disheartened. And how can they really just break out of that state and then like get started clean again?
Yeah, so I think, right, okay, so I'm going to talk a little bit about mindset, right? I know I like to talk about taking action and stuff. I think this is very important, but I think a lot of investors or traders right now, right, unknowingly or knowingly, right, is they're approaching the stock market as if like it's a casino or they're gambling, right? So this is more of a mindset stuff. So what happens is when they invest in a stock, right, even though, okay, hey, I've done my research, right, Ray Ming says it's good, right, hey, Chicken Genius says it's good, right, but when I make my first investment, right, I always have this what I call the praying mentality, right? A lot of people have it. It's like, oh, I pray the stock goes up. If it goes down, I'll be damn sad, man. I'll be damn emotional. So what happened is, right, what I tell a lot of new investors is, okay, right, just mentally prep for your first investment, your second investment, third investment, right, that it will definitely 100% go down. Right, so I want to set people, I want to ground themselves, right? They say, okay, it will definitely go down, right? But I want to remind you again that, right, if you have confidence in a business that keeps growing, right, it will eventually go up. Right, so as in, it's just more of a mindset thing. But I think sometimes people need a reminder. Okay, right, okay, I invest in this. I hope it can be a green, right? But the likelihood of it going red is actually going to be very high, right? But what happened is, I am confident that in the long run, in the midterms, right, it will still go up because why? The business is still going up. So I think that's the first tip, right? I think one thing that I think you also mentioned, right, which is that to preempt these portfolio drops, right? And what happens if your portfolio is a bit bigger, right? That means you invest in a few stocks, right? And now you're like, okay, it's all-time high, but what do I do next? Do I sell more? Do I buy more? Right? I think the other next tip, right, is that, okay, right, let's say right now your portfolio is it grew to 50K, right? What you want to do, right, if you're afraid they'll be emotional, say, okay, right now, yes, it's 50K, but let me mentally prepare for myself right now that it could potentially drop to 40K tomorrow. Right. And so when you have that mentally prep, and what will I do when it's 40K? Right. And I think once you prepare in advance, right, whether is it through writing it down, right, talking with a friend, right, putting in your mindset, right, the likelihood of you, right, staying in your positions, right, building a conviction, putting in for the long run, right, will be so much higher, right? And why am I talking so much about the mindset stuff, right? Because I realize, I think you also will agree, right, which is that the reason why most investors are not rich, right, is not because they're not doing enough stuff. It's because they just their hands are too itchy, right? They just want to make a lot of movement. But one thing I think recently I was talking to one of my friends who was starting investing, right? I was saying that actually, right, because I think, right, what happened is I thought he investing like 1 year ago. Recently, he said, hey, sorry, I need to call you again because I haven't been doing anything, right? And I think through the conversation, I realized that he's thinking that once I press invest in a stock, right, my life will completely change. Like, dude, it doesn't, right? You trade, yes, some money is a portfolio, but ultimately, right, your life doesn't change, right? And what you need to do is be okay with the fact that your portfolio doesn't change like crazy, right? But that life goes on as per normal, and your most important job is to have holding power and making sure that your companies are doing well. So those are a few tips, right? But I think one of the big thing, I think a lot of people feel that it's about doing more things, but I think we all know that, hey, it's about the less things you do sometimes, right, the better, man.
Yeah, definitely. Like I just read somewhere, like someone did a study. S&P did a study, and then those portfolios that actually did the best are actually investors who died, who are dead. So they never lock in their
Oh,
accounts.
wow.
And then the next 10 years, it just compound because no action is taken. Yeah. And
Wow.
so this, like, and on the other extreme, like, you have people who are trading in and out. They might not have the best results. Yeah.
Yeah, so what I would do, right, is for those who are itchy, because I know there are some people who kind of use stock market as a mini casino, lah, right? So what I did, right, what I did is, like what I said earlier, right, a part of your portfolio, right, says your stocks never touch portfolio or your never touch group. That means these companies don't touch. The only time you touch it, you buy more, right? And then the other one, right, is what you can do is then is your hands itchy portfolio. That's when you can do a bit of trading if you want, if you have the cash to spare, right? If not, just invest in, don't touch it. And at a more implementable basis, right, is for example, at the end of every year, right? If you want end of every 6 months, that's fine as well, right? Okay, say, let me look at all my companies again. Are really really the best companies? And only then do I decide whether to touch it. But it must really be done by, not just by on the spot of the moment, but really because I analyze the company properly. Right, so I think that's more of an implementable thing. I think some of your audience can take.
That's a very good tip. Like having two groups, right? Like sort out your trades and position in two groups. One is like buy and hold long term, do not touch, right? You can put a category, do not anyhow sell. And the other one will be like, my itchy finger trades and all that, and perhaps like put 10 or a certain percentage, small amount there. And then, and also like every 6 months or 12 months to do a review on the do not touch portfolio, because it's not like you buy and hold forever, but you buy and monitor, once in a while, right? Like awesome.
Yeah.
Right. So, like in your opinion, right? Like, in my opinion, like I think you're quite a good investors, and I think you are quite up there. In terms of your implementation, you learn a lot, and I think that's one of your main strengths. But if you don't mind sharing, what is also like the top one or two mistakes or like a bad experience that you had so far with investing, your own personal?
Okay. I have a lot to say.
You might have a few, but me just share one or two that is more distinct to you, lah. Just
sure.
I always ask like that. Yeah.
I think one of my biggest mistakes, right? There's two big ones. I think number one, right, was I think in 2014, right? So 2014, right? This context is that I was in university. So like I said, I was spending more time having fun, chilling, studying, right? Instead of looking at my portfolio and looking at companies, right? So I followed this trade. I think some of you might have heard it. Those a bit more lao jiao, right? Is this ticker called USO, right? It was the oil ETF and stuff, and right, people are like, I know USO is an all-time low, right? Oil is people are going to use oil, right? And without understanding what the ETF was about, right? Because I think there's a lot more intricacies and complexities that people don't understand, right? I invested in USO, right? I think that was when I lost some of my biggest portfolios ever, right? Because one of my biggest losses ever in my portfolio history, right? So what happened is after it dropped more, right? So some people are following was like, no, now it's low, you should buy more, right? So I put more money to buy more, right? And I think during that period of time, right, because I wasn't convicted, right, I was just following blindly, and that wiped out some of my big returns, man. So that big reason is just basically I didn't really understand the company I was investing in. It wasn't my circle of competence, right? Warren Buffett style, right? And I was just following blindly, right? So I think that's one. The number two, right? So this is not really a loss of portfolio, right? I think this is more of the opportunity cost. Yes, I think a lot of us would I think a lot of experienced investors would have faced this one way or another, I feel, right? It was this company called Netflix, right? So Netflix, I think I looked at it was when it was like, I don't know, 50, 60 bucks. I don't know when was it. Right now it's how much? 500 is it? Right?
About a few hundred,
yeah. So when I invested in it, right, I like the company, man. I was reading about Rule Breakers by Motley Fool, right? The concepts. I felt that Netflix fit into it, right? I knew people were starting to watch it, right? I knew people were subscribing, right? And I think what happened is it grew a little bit, right? And then after that, I think there one bad report saying, subscribers wasn't as big as expected. I was like, actually I torrent. So maybe I don't really need Netflix. So I just use all these like weird analogies for myself. And I was like, okay, I think it's time to sell Netflix. Right. And I think after a very small dip, it just shot up all the way. Right. So I think that was one of my biggest mistakes so far, which is that, right, I had conviction in the company, right? But because I was very eager to lock in my gains, I was paranoid, right? And then that's why I sold it, right? So I think that was one of my biggest mistakes, that in the sense that I could have got so much more returns in the company, right? But because I was just afraid with all the negative news, I was listening to people talking about it, right? Who like I said, I didn't check their credentials. I was just reading Google articles, right? SEO doesn't mean you're a good credential guy, but yeah. So I follow all this and I sold it off, and I think that was one of the biggest mistakes I did for my investing, man.
I think that's something that I used to be guilty of in the past. So like let's say I will find a reason to sell. That means I justify. So in your case, you just like, oh, because I so torrent, and then
Yeah.
and then So this is something that I think is good that beginners or even intermediate investors, right, if they can be aware of their thought process, like every time, let's say, like for example, last night, CrowdStrike dropped, and then because of like there will be some news, and then you say, actually, yeah, CrowdStrike not necessarily doing very well, and then you justify it by, so this is something that we as investors we need to catch ourselves, yeah.
Yeah, for sure, man. That's why
Right.
staying power is very important. And that's why a community helps, right? I think
Right.
what I do is then I will join communities that actually have with people with the track record, right? People are supportive. They're not a whole bunch of different views, like a lot of Facebook groups, right?
Right.
And yeah. So anyway, I don't know. Yeah, I know what to say. Right? But I think they are don't join groups that have like a whole bunch of opinions without anybody really anchoring
Right.
the content. Because I feel that then if you're hearing from everybody, right, you're just going to have results like everybody, which is honestly not very good.
Right. That's
Yeah.
true. Very, very true. All right. So maybe just to share, right, in terms of like accelerating, just want to ask you, in terms of accelerating one's learning curve, right? Besides
Yeah.
whatever we have covered previous, in this session, what other tips or do you think will be good, like for beginners or intermediate investors level, like any secrets, routine, like steps, like because I think
Yeah.
that's something that even I myself will be very curious, like how can one implement and accelerate the learning curve, because
Yeah. So
yeah.
So what I did, so when I was pretty new to the space, right? So like I said, I'm somebody who was very good in the first information hoarding, right? First, I'll talk about that, right?
Right.
Not so much to hoard, but how can you make sure that you learn on a regular basis? And now I'll talk a bit more about implementation after, right? So in terms of information, right? One thing I do, I think similar to
Right.
you, right, is I subscribe, of course, to a whole bunch of different YouTube channels,
Right.
right? And YouTube channels that I know are legit, right? I check them out. I do my research. I know they are
Right.
good, right? One other thing is, of course, one other thing I did is I have a separate email newsletter just for my investments,
Separate
right?
in this, right?
Yeah, right. So I'll lump as in I will circle all this back into
Wow.
one big thing later. But one thing is investing newsletters, I'll read them and stuff. But if I know that okay, maybe I'm busy that day, right, or busy that timing, right, I don't have time, so I'll save them into a pocket, into a application called Get Pocket, right? And it's what is an app that actually saves your articles offline. So next time, right, when you let's say you do have internet, right, or you are on the train, you're on the bus, you can really read them when you have your own time, right?
Right.
So that's one thing I do. You can save them offline. So interestingly, right, last time when I used to still travel, right, I would read all this whole bunch of articles when I'm on the plane, right, I have nothing much to do, and I think that was a pretty good spend of my time, right? So those are the few things I did. And the other thing I put for myself, I felt was pretty good, right, was so that, right, so assuming that most of you watching here are 9 to 5 working professionals, right, and so your free time, right, is from 6 p.m. maybe or 7 p.m. after dinner all the way to 11 p.m., right, to when you sleep. So one thing I do is I put myself, right, I actually schedule my investment research time way in advance.
Wow. Right.
One thing I realized is a lot of people, right, is okay, I like investing. Let me go and research as much as I can about it on a nightly basis. But because of that, right, I might get burnt out at times. I might feel tired of it, right? Or sometimes I just feel tired. I don't look at it investing,
Right.
right? And you are not consistent, right? You might suck in a lot of information when you're feeling excited, but when you're not, right, you might lose out from potential gains, right? Research insights, right? Than everybody else, right? So I know now a lot of people are excited, right? So that's fine. But when things are getting a bit more boring, right, I think that's the challenge. So one thing I told myself is okay, right? Every week, right? Firstly, every Monday night, right, is for me to read up about businesses, investing, right, and stuff like that. I don't just read on investing news. I also brush up on my business knowledge as well. How do I build a good business, right? Good books like Good to Great, right? These are books that teach on how to build a sustainable and great business, and I use those knowledge and insights, right, to apply to my investment analysis as well. Right, that's number one. Right, number two, right? Let's say if you're doing options, right? So every Wednesday of the month, right? Every third Wednesday of the month, right? I'm not going out with friends, right? I'm not going with my family, right? I'm staying at home because why? Right? 2 days later is options expiry date for Monday options, right? And I'm going to research on okay, what am I going to do for my portfolio next, right? So I schedule them on a very regular basis, right? And I think those together, right, combined, help me to really just not just like learn a lot all at once, but do it on a very consistent basis, right? On the other hand, there's not a lot of recommendations I would do, but I think one of the biggest recommendations I did that helped me in terms of business and then investing, right, is actually this show called Shark Tank. Right, I think it's entertaining. Right, I think it taught me a lot about business and stuff. And I feel that that's something that a lot more people can watch off. They want to educate themselves, right? Because especially right now, I think you also know a lot of people are focused on growth companies, right? And with whatever you watch in Shark Tank, right, these are principles that actually growth companies can use for themselves, and I also will
Nice.
apply them to my own
Right.
investment analysis as well. So that's just entertaining, and it's also education as well. That's just a small little
Right. Yeah, I think
recommendation.
that's something that people can get more, especially if you're not an entrepreneur, you are just like you're more of an employee. You want to be exposed to how investors, how Elon Musk think. I think like we definitely a series like Shark Tank or that would definitely help. And then
Yeah.
you can say what you said about having a system, right? Like design, like it's by design. Like every Wednesday, every third Wednesday of the month, you'll be staying home because you'll be thinking about what options trades to be doing for the next month. And then every Monday of the week or something, you'll be scheduling time to read up about investing, business, and all that. I think that's very important because some of us like if so like for you, right? You have a system to it, so it's like we know it's like high in priority, but a lot of times, sometimes, right? Like if we are busy in life and we meet up with like if I friend throughout on Monday night, I just go out and then that week I'm not compounding my knowledge in
Yeah,
anymore.
I think for maybe right now in this period, as of this time the
Right.
interview is done, right? Maybe like 1 year later people watch it might be different, right? I think the challenge is a lot of people are looking at the market every day, which is fine, right? I think people are excited, people are motivated and driven, right? But I feel that eventually, right, you need to start setting time for other areas of your life, right? So this is a bit more than investing, right? Because if you just focus on making money, right, which is good, right, important for sure. But if you just every day looking at the market, just getting sucked into it, right, you might not really be able to appreciate or enjoy other areas of life as well. Which is one thing I love, like Rayming, like some days, right, you'll be having your dinners and stuff, be like, oh, I'm not going to look at the market, I'm not going to chat, right? But I still see a lot of people still being active and stuff, right? And my only concern for this group of people is that, okay, you might make a lot of money, right? But if you're just constantly thinking about investing, right, are you really stopping to appreciate other areas of their life as well? That's just my personal philosophy that, okay, right, there's some days that I'll be full on present into it, but there are some days that, okay, other things in life are more important to me, and let's focus on that as well.
Definitely,
Yeah.
it's good to have a balance, for sure. And maybe just to add in a point, like something I observe also in a lot of investing community. Sometimes it's people focus on the wrong things, like what you previously mentioned about they focus about news, analysts, like tonight the market is like my favorite stock is like up or down and all that. So you just think about it this way, like your investing time, let's say it's 1 hour per day or 2 hours per day, right, or per week. How much of that time, right, is allocated to investing stuff that actually matters tomorrow or next week and can compound? Like for example, tonight I look at the market price. So I spend 2 minutes to lock in. I look at my share up or down tonight. Tomorrow when I wake up, doesn't really matter. So the knowledge, the time that I spend, it doesn't compound forward. But hey, if I take the 2 minutes and I read out more about Tesla, like production numbers and all that, like what is the next thing, their quarterly reports. These are information that can be compounded. So you want to break down your investing stuff into, what are things that actually tomorrow doesn't matter anymore already, and those that
Yeah.
actually will be with me, and I can compound the knowledge and the insights over the not just day by year over the next few decades.
Well, very, very well said. I think a lot of people spend too much time on like just make like I wonder how's the stock price like, and then look at the reasons why I think, and then they do. So I think one thing I love is that I think is like choose the more effective high value stuff to your investment
Yeah,
journey.
I
I think
think that
for
put it
sure,
very nicely. All right,
very
so
important.
moving on. All right, so I just ask you some curious question. Like so, like,
Sure.
I always ask this when I interview. Like if you can restart again, back to with a smaller portfolio, with what you know right now, right, with the knowledge you have right now, like and you already have 10K, right? How will you do it? How will you invest it? Share some thoughts and insights.
Yeah. So I think one thing to note is that, okay, right. So for example, for me right now, right, I'm going to give two scenarios just for the fun of it, right? So one is, okay, I'm a 9 to 5, right?
Right.
I'm
Two
active,
scenarios,
right?
right?
I have a bit of free time, right? I don't have to like be out to work double jobs every night. So I'm someone who has a bit of time, right? So if I was in this position, right, what I will do is, okay, if I don't really know what's my risk preference yet, I don't really know what's my risk tolerance or what I really want to do, I can be semi-active, right? What I'll do is I will actually split my portfolio into 50-50, right? One
Right.
is options, one is stock. So 5K, 5K, right?
Right.
So that's number one, right? Both what I will do is, okay, right? I would target, right? Because right now, let's say I don't know much about what's happening in the economy, in the market and stuff, right? I
Right.
will aim for both of them to have maybe at least about 20% cash, right? 20% cash for each, right? Just
Right.
okay, if there's opportunity, it drop, I can buy more. So
Right.
what do I do with the rest, right? I think number one, right, I would just buy call options, right? I'll buy long-term call options from options
Long-term
portfolio. So
options,
yeah,
right?
so companies that I like, right, that I have high conviction in, then assuming that's in my watch list, right? Or right, at the same time, they are also they also meet their support in terms of the technical analysis, right? I will then start entering long-term call positions, right? So let's say 5K, right? I have about 3K to go about doing it. I can buy 1, 2, or 3 call options. I think that's fine, right? But those are companies that I have very high conviction in. What I would actually personally do in 2 days, right? Because I'm focused on some other areas, right? I'm not so focused on investing, for example. I might even just choose one big company, right? And one strong company and just put a 3K long-term call option and just let
Right.
it run for long
Right.
term,
Right.
right? For my stocks, right? Because 5K is not a lot. Right, 5K is not a lot, right? So what I'll do is probably invest the maximum, right? Maximum 2 companies only, right? I will never maximum 5, 10 companies. I think that's a bit crazy. 2 maximum companies, right? I'll invest about 1 to 1.5K, right? At the least, right? And then if it drops by about 10, 15%, I'll enter more, right?
Right.
For those a bit more active, it drops 1, 2%, you can enter one share by one share. That's a bit tiring, but for those people who NTG can do that, right? But so what I'll do is maybe a maximum of 4 companies in total, right? Out of this 10K portfolio, right? And then when it drops significantly, right, then I will enter more as I go along, right? And yeah, so I think that's overall what I would do, and of course focus more on growth stocks so you can follow Ray Ming to find out what the companies look at as well.
And you can share your 4 stocks also if
Yeah.
you want to.
Yeah, if I had to choose, okay,
Yeah.
I can share with you what I have also. I think it's not much different from you, bro. I think it's fine. Garina, I think there's Garina, there's CrowdStrike, there's Tesla.
Limited, huh?
Yeah, Tesla, and then the fourth one, right? So depending on whether you're looking at options or stocks, right? There's Square, right? One thing interesting is Square, it went up quite a bit. And if you want to be a bit more active or just you are a bit more a bit more aggressive, I would say, right? A company called Lemonade, you can go and check out.
Mm.
Yeah. I think that company is, to me, I would call it my slightly riskier trade, because the execution wise, you don't know how well they will do. It shows that, hey, over time, their traction is pretty good, but they still have a long way to go to become
Right.
really a company that disrupts the insurance space. But so even if it goes down, as in, I won't be like so emotional, but people, if can't take the right, then you might want to choose a more stable company.
For sure.
Yeah.
So
Yeah.
guys,
So
please do your own due diligence. Just take these stocks as this is just Marc's, personal stocks.
Yeah.
Like how he look at it. Everyone have their own different risk profile. Please do your own due diligence, all right? And
Yeah.
do your own research and build out your conviction. All right,
Yeah.
that's good. All right, so I think we have covered quite a fair bit, and I just want to really keep this short and precise. So, any final thoughts that you could like to share, with the audience, and any like final tips that you think will be relevant, and also right, like if the audience want to find out more about you, how can they do it?
Mm.
Right.
Yeah, hey, so I think okay, so as of this time, this interview, right, so I'm gonna
Right.
share just my quick thoughts. I feel that, okay, right, the people who are following you, so I'm just assuming a lot of them follow you, they have a bit of experience investing, right? They might feel super happy right now. They might feel like, wow, last year was 100% return, right? 200% ROI in 2 months, wow, right? As much as I'm very happy, right, I think you also know, right? I think you have been reminding us that, hey, don't expect to always have a 500%, 300% return every single year, because you never know what's going to happen, right? I think that's just something for people to note, right? Yes, right, things are pretty good, well, but you know that at times of huge euphoria, things will go down. It's history, right? But if you focus on companies that are actually innovative, that can grow and stuff, right? Even if you take that temporary loss, that's totally fine, right? I just want to take one big, I think 2001, right? I think Amazon, right? The company dropped by, their stock price dropped by 60 to 80%, even though, right, their revenues, their growth is still going up like crazy. So that is the time you really want to take a bit of opportunity, right, and build your conviction of the company. So I'm just saying, do not be like, wow, every day is going to be 100%, 50%, right? Just chill, calm yourself a little bit, right, and just say, okay, right, let's just do enough of the right things. Right, I think it's number one. I think number two, just to repeat a little of what I shared earlier, right, which that yes, investing money is good, right, but ultimately you need to know what are you doing all this for, right? So I think about actually it was about last month, right? I was reminded of this fact, right? Because my portfolio was reaching an all-time high, like crazy, right? And I started feeling very like uncomfortable, because I'm like, actually, yeah, I hit all-time high. Then if I keep hitting all-time, like, what do I really do with the money? So I've always been focusing on growing, but earlier this I was just like, crap, man, what do I actually do with all the money when I get to where I want? So I started focusing a little bit more on, okay, right, when I hit this number, I'll be a bit less active, right? Then I'll start maybe be a bit more passive or more stable companies so I can grow my portfolio, and then every month to give myself a passive income. So I started planning more of that. So as you're in a hustle, right, I think what you want to do is to also remind yourself, what are you doing all this for, right? Because ultimately, if you just focus on money in your life, right, you might not achieve the kind of fulfilled life that you want. You might achieve a profitable life, but might not achieve a purposeful life, right? I think that's one thing I also talk about, right? And then I think where you can find me, you can check me out on Facebook, right? I'm pretty active on Facebook, right? I think you can share the link in the chat and stuff, right? And I also have
I'll
Facebook.
add in, so I'll be uploading this,
Yes.
and I'll be adding the links below.
Yeah.
That's
Yeah, thanks, bro. So I think I also have a Facebook group where I give a lot of training on productivity, business motivation, right? So once let's say you get a bit of money, right, from investing stuff, right? My thing is, let's see how you can reinvest those profits and stuff, right, into some other areas of life as well, whether it's your energy, right, your health, right? Your relationships, right? For some people, right? And then you can have an overall fulfilled life. So that's what I focus on, right? Productivity, motivation, fulfillment, purposeful, right? So that you can just not just live a very rich life, right? But in other areas of your life as well.
Right. So very, very good. Final, share tips.
Yeah.
Like keep ourselves grounded. Like so, I think also like Tesla went up so high. I wouldn't
Yeah.
price of a 30% pullback. So keep ourselves grounded in terms of our expectation, and also think about the end game in terms of like how does this investing our portfolio all time, how does it revolve, and in the context of our lives, like make so much money, then okay, how am I going to spend it? How am I going to transit into a more stable portfolio, so and so forth.
Mm.
Right? This is something that I also do quite frequently.
Yeah.
Yeah, I'll share more about it next time. Right.
Yeah.
But right. I think it's a wonderful session. I think there's a lot of tips that I also learned, a lot of stuff from you during this session. All right. So I just want to keep it short here and really thank you so much for your time. Right. And guys,
Yeah.
please follow Marc on like Facebook, Instagram. I'll putting the links below, right? Because he really share like really awesome tips. Not sometimes he share about investing stuff, but also like when you share tips about like life, how can you be more productive, and that it also translate into you like doing better in your investing and other areas of life, which I think is really good.
Mm.
Right. So I'll be sharing the links. Please follow him and please show Marc some love, right? Right. On social media presence. All right.
All
Right.
right.
Thank
Thanks,
you so much.
Ming.
Right, I'll be ending the recording right now. All right. See you.
Bye. Bye, everyone.
Bye.